Thank you, Susan. And hi, everybody. I'm really excited to be here again. And congrats, you made it to part two. So I'm really excited in just getting to talk to you guys again. Today, I will be talking to you guys about credit. So credit, actually, I was telling Susan, is one of my favorites. And the reason is because it's just so much good information. Because a lot of times, if we don't have the right information when it comes to credit, that's really where we find ourselves getting in trouble just because we're ill-informed. So this is, I'm really excited about that we'll be talking about it. So during our time together, we will be discussing the impact that credit has on your financial goals. We're going to build on a knowledge that you perhaps already have about credit, and we're going to identify ways to just help you build and manage credit. I also want you guys to be comfortable, like if there's any myths that you perhaps want to know if they're true or not, those are great ways for us to talk about as well today. Really my goal today is for all of us just to get our questions answered when it comes to credit. And if I'm not able to answer them at the spot, definitely a follow-up would be available for you guys. And just, similar to last time, for those of you that attended, participation is great in the sense that it lets me use your scenarios because it's more relatable and perhaps the same question you have, somebody else has. So that's really the reason I use participation, whether you want to take yourself off mute and just shout out an answer or type it in the chat box. Those are just great ways for me to just make the examples relatable to the audience. But if not, if you can't really think of anything, no worries. I have plenty of examples for you guys. But those are just some things. And once again, we're always here to respect each other's opinion. If perhaps we don't agree with something, then that's when, maybe we can just have a conversation in regards to with respecting everybody's opinion. And anything else that you guys can think of, then we're definitely open for that. All righty, okay. And this is once again session 2, so 2 for your journey on credit. And today what you'll be able to walk away with, my goal is knowing the high cost of low credit score, and then also how to build credit. And then I'm gonna leave you away with some homework, promise nothing too big. And just at the end, if you guys have any questions, we'll talk about that. So one of the things that I want you guys to look at and how credit impacts our lives, we want us to look at our financial roadmap. We talked a little bit about last time about like what creates your roadmap. A lot of it is things that are important for you. I hope a lot of you guys got great use of that quiz and found out what kind of spender you were. I'm excited to hear if you guys want to throw that in the chat box, what kind of spender you guys were. And true to my nature, I took it again and I'm still a social spender. So typically you don't tend to change who you are as a spender. Sometimes things could change if something happens, but for the most part, your personality seems to stay the same throughout time. Where you are today, that's really important for you guys to walk away with. And then what financial goals do you have, and really tying them in with credit. So what's in the number, right? I want to talk a little bit into detail about credit. So credit words, right? So credit is the ability to buy now and pay later. So that's what it means when we put something in credit. A credit score is generally a 3-digit number considered based on your behaviors, whether it's loan repayment or just how you maintain your finances when it comes to borrowing. And then there's a credit report. So this report, think of it as a report card for school, but it actually is a report card for all your spending and your lending when it comes to just, all types of things that you borrow, whether it's a credit card, home, and so on. And then there's credit bureau. So what that means, these companies basically just gather information from all lenders, creditors, and service providers, as well as public records. So this is a couple words that I want you guys to be familiar with. And understanding credit. So what goes into a credit score? Today, we're gonna go a little bit more into detail. There are 3 national credit bureaus. It's Experian, Equifax, and TransUnion. So some of these have already, some of us are already familiar with them. But these are the 3 main ones that put together your information when it comes to your credit score. Provide information to credit scoring companies. So there's a FICO and the Advantage score. Really the difference is the way that they calculate credit score. They're very similar, but they're constantly coming with new ways to generate a credit score. So a lot of times they put new things into consideration. So it's really neat, but for the most part, they're all similar, which will go into details to what they take into accountability, what they take into account. And credit scores generally range from 300 to 850. So if you guys didn't know the numbers, those are it. So for those of you who think that you have a 50 credit score, that's not possible. So don't fret. So 300 to 850, and then we'll talk a little bit about where's the sweet spot and where we would like to be. So speaking of that, the poor, the good, and the excellent. So The range is the poor to excellent credit scores. The differs between scoring companies, and most provide an overview of the score and the definition. So when you look at this, the poor, fair, good, and excellent. So a lot of the times it's gonna really depend where you're at. So it's really important for us to know where we're at when it comes to our credit score, and kind of what the bucket falls in, because typically that's what we'll be looking at when it comes to lending. So these are just really some things, maybe write them down, or you guys will be able to get that information, which will really help out. So this is one thing that I kind of want to put it in perspective with you guys. We talked about like excellent credit, fair credit, and poor credit. This is when it really matters. So let's pretend that we want to buy something, and I want to really put it in perspective. So the amount is $1,000, right? So let's say we want to buy a brand new jacket, right? Brand new jacket, let's just say it's the best jacket out there, and that's what we're paying $1,000. So it's really interesting when we look at why credit's so important. If we are going to put it on a credit card, it's because take a look at where perhaps we might land when it comes to poor credit. And that's, let's say, 580. So when you look at the chart here for 580, the average interest rate is 20.5%. Then we look at the 719, which is considered good to great credit. You just want to see how drastically it changes, more than half. So those are things to really think about why good credit is so important, or just to maintain a healthy credit. The next one that I want you guys to look at is the monthly payment. Monthly payment meaning how much you're going to give every month for this beautiful $1,000 jacket. When you look at the 580 score, you're paying $42 opposed to the $34. So it's a big difference in a sense that, you know, all we have to do is just kind of work on that credit to really help us out to not have those high monthly payments along with the interest rate. And what would happen in 36 months? So let's say that we don't pay off this jacket right away. If our credit is not where we want it to be at 580, in total, we're looking at paying close to $1,500 for this jacket, opposed to the $1,200 that somebody that perhaps had a little bit of healthier credit. So this is a really great way to see what's the reason I want my credit to be healthy. Now, if it's already healthy, great. My goal is really just to continue to just help you and understand that we want to keep using our credit very healthy. If our credit perhaps is not where we want it to be, that's no problem at all. Our goal really is to understand how do we get there. But the biggest thing is knowing the reason, the why, right? And I want to make sure that you guys aren't paying high interest rates or paying more for that beautiful jacket. So it's really important for you guys to just kind of see that. So this pie chart, really neat pie chart. So if you guys ever wonder what went into a credit score into detail, then this is it right here. Payment history is the number one, and it's really important why I want to go into it. It's 40% of it. So if you guys ever took a class or, you know, any type of test, a lot of the times there's like this big piece of the test, right? That really, it's so important. And I always say payment history is important. So in the chat box, or just can anybody say, how many days late can you be in a credit? So let me see how to ask this question. How many days does it take before a credit card counted against you in your credit score that you're late? Does anybody know? Can anybody give me the days? Let's see, we have somebody. 30, okay, good answer. Anybody else? So really neat, because I did not know this until I learned it. It's actually the next day. So if your minimum payment was due, and then the next day it's not, it immediately counts as a late payment. And those are things that we don't know. Now, this does not include your home or your auto, because a lot of times we get a grace period, and a grace period means an extended amount of days. It depends on the lender, so make sure you always check. But when it comes to credit cards, they're very particular when it comes to paying on time. And we don't mean pay off the balance. It just means that if you use the credit card for $1,000 and your minimum payment is $20, and let's just say you're on vacation and you missed it by the day that it was due, even if you pay it the next day, it's still considered late. So those are things to be really, really conscious of it, because a lot of the times people think, well, it's just going to be 1 day or two. And the reality of it is credit cards don't give you a grace period. So it's really important for us to know that. And just some of the things that I like to tell clients is, like, if you are going to use a credit card, always do auto pays, because a lot of times life happens. And I really want to make sure that you guys are staying on top of that. And a lot of the time, I'll be honest, clients have the money. A lot of things, life gets in the way, and that's completely understandable. But once you know what the hot deadline is, it lets you be more conscious and even pay it a little bit ahead. So those are some things to be really be aware of. The next one that I want to talk about is the utilization, which is about 20%. So the utilization of it is just basically how much of the credit are you using? Are you going above the limit when it comes to the credit card? Are you perhaps, it kind of really wants to make sure, oh, that's a good question. It really wants to make sure that your utilization is staying at a place where they know that you're being responsible. So the way that they know that is that you're not maxing out cards, that nothing's close to the limit, that you're really, really being cautious of that. And then when it comes to balances, that's another one as well, that it's kind of similar to the utilization when it's not so much the up and down, but it's how much balances you keep over time. So does anybody know what the percentage is of each credit card that the credit bureau would like for you to stay below? Like what percentage? So if you have $1,000, what percentage of that can you owe before it counts against? 30%, that's great. So that means that if you have $1,000 credit card and 30% of 1,000 is 300. So if you owe over 300, that could potentially hurt your credit score. Now, somebody had a great question that says, if you pay early, does it help your credit score? So very interesting. It's early payments won't increase your score because it's early, but it eventually will increase your score because you're paying off the balance. So it's whether you pay it 1 day early or 5 days early, that's not really a difference. The difference really is, are you paying it on time and are you paying it down? So that's a really great question. So do not stress about whether you have to be a whole week early or just 1 day early. Let's just worry about on time or earlier. So that's a really great question. And the debt of credit. The debt of credit just means the type of credit. So it means how long have you had credit for, right? So it could just mean that you've had a credit card for 10 years. Creditors usually like to see that. The credit bureau likes to see a longer credit card because it means that they have a longer reputation with you, right? So if you had a credit card that you had for 10 years, my recommendation is always that is considered your long-lasting credit card. So those are the ones that I always say your anchor card, right? Because it shows the credit history. Some clients I know they feel like, I don't want to close my credit card because I don't use it. That's really up to you, but I want you to think that the credit bureau looks at the longest credit card that you have, and that's really what averages your credit score, and it's really to your benefit. So those are just things. And also if you have, whether it's a home, auto, or a credit card, different types of credit also helps you to see that you're a responsible borrower across the lines. So those are just things also that encourages you to have a better credit score. And then recent credit. So those are.
Oh, I was just going to chime in with a question. I'm sorry to interrupt. I was curious.
No,
just thinking about credit scores. I actually saw something that said that they weren't started until the 80s. Have you heard this through your presentations? Is this true? I saw it on a meme online, so I'm not sure if that's actually
what, that is a great question. And I'd be lying to you if I said I knew, but that is so interesting. So It's the 80s, right? So that means that we've been like 40 years into it, and it sounds about right. And I'll be sure to get that answer once I do some more research. Good question. I haven't had that asked. But that's so interesting. And, to Marilyn's point about the 80s, and we think about it, some of us are 80s babies, right? Me, myself, 88. And it's constantly evolving. Barely in 2017, they actually came with another formula. And they're looking into adding other things for credit. I know that if you default on the mortgage, it's on there, but there's been talks of perhaps adding you being on time with paying your rent. So those are really cool things, because I know a lot of great people that are really good about paying on time with rent, and I think that should definitely be told. So great question, Marilyn, and I think it has a lot to do with the fact that credit is so new. Like, I considered 40 years ago new, so that's actually a really good point. I will definitely look that up for the future.
Yeah. And then as kind of a second part, like from a community development perspective, it seems like, the credit score definitely favors people who have money, the people that are affluent. Do you notice, like in research, that, lower income areas, that there's just overall lower credit scores, maybe because they're having a harder time meeting bills? Like, is there any sort of like community development perspective on it?
So I'll talk about my experience, and as well as what I've seen based on the communities that I serve. So when I used to, for myself, really, I did not come from an affluent family. I like to say I'm like I'm going to be self-made. I always tell my niece and nephews, my goal is to be self-made so you guys can keep my money. But it is habits. And what I've noticed when it comes to the communities that are low income and are not affluent, it really is just not knowing the habits. And when I look at the minimum payments that people miss, because think about it, it's 40%. A lot of the times the minimum payment is $20 to $30. So once we start educating low income communities, they get really focused, and knowing that they can focus around paying the minimum payment and knowing also the other information. And it's actually interesting because most of the myths that I've heard about credit comes from the low income communities because they heard it from my neighbors, friends, coworker, and that's kind of how it goes, opposed to really educating ourselves. And perhaps that has a lot to do with just like our parents and the education around us. This is why it's so important to educate. But to be honest with you, I've seen affluent people with not so good credit scores. And I'm going to say, to me, I've said it's always the knowledge when it comes to that. But that's a really great question. And then the last one is available credit, so 3%. We talked a little bit about that. They just want to see that you have available credit should something happen. So it really takes us into consideration, like, are you using a credit or are you not? I know a lot of people think that they have to be leaving a balance in credit cards. That is actually a myth. You don't need to leave a balance in your credit card. They just want to know that you're an active user and, paying back responsibly. So those are just some things. And any other myths that you guys think that you want to ask, please put them in the chat box, because this is really where I want you guys to focus. So if it's one thing, and we'll talk about that at the end, but like, if you think of it really, right, what is the biggest piece of the pie? We all want the biggest piece of the pie. It's going to be paying on time. And those are the one things. And guess what? What happens if you don't have enough money to pay your minimum payment? Then you look back at that recorded video we talked about budgeting, right? Because that might be your goal. Like, how do I make sure I make my minimum payment on time? So that's why I love to teach the savings and budget class, because once we are able to manage our finances, it really lets us play the credit game. Because if you think about it, it really is just education. And I strongly believe that with the right education and the right habits, our credit score can get where we need it to get. It's a great question. I'm going to jump to the next one. Bear with me. Oops, click too many. So the high cost of a low credit score. So when it comes to managing your credit, use credit wisely as part of an overall financial plan to help you build assets. So not all credit is bad. I know some people have that stigma that I just rather not use credit, but a lot of the times the way it's very helpful is perhaps we want something large right now that we know eventually we'll pay it off with time, but we don't have it right now. And the biggest one is purchasing a home. If any of you knows the housing market, it is insane. It's one of the what's the word? Well, for lack of a better word, craziest market that has been reported in history. It's just the housing prices have just gone through the roof, literally. So those are just great ways for us to build our credit, because a lot of the times we don't have the either 400 or $500,000 to put down in one lump sum. So it's going to be important for us to really work on that credit to help us get there, because we all know that our goal is to pay our homes off. But at the moment, this is why credit is so important, so we can build assets in that sense. And also paying in full as part of a monthly budget can be beneficial. Using credit for consumable items or regular monthly expenses could indicate that you're spending more than you earn. So what that statement means is that if perhaps you're out, let's say you're out with the kids and you're looking at your bank account, and even though the kids want to go to McDonald's and we can't go to McDonald's because the debit card says we can't go to McDonald's. What happens is sometimes we put the McDonald's on the credit card. And a lot of the times we have to be careful because that can become a habit. And what happens is, and I've been guilty of it, is sometimes you even pretend like that credit card's not there. So you keep swiping and just paying the minimum, and that just builds up. So that's why it's so important for us to make sure that you know that the money is there. A lot of the times people like to use their credit card for points, and I think that's absolutely great. But you want to make sure that that money is always sitting in your debit card, because all you're doing is transferring it over once you use that credit card for the points. And I get it, emergencies happen. I'm not saying that, to feel guilty about using it for emergency, by no means. But if you are able to control those habits like we talked about in part one, it's really important for you guys to just, use the credit card with the intent that that money is already in your bank account and you're just going to pay it off because you're just wanting to show that you're a responsible borrower. So that's just, I wanted to clarify that statement. And then to staying on track, right? So can somebody give me some reasons why people don't check their credit score? What are some reasons? Like, perhaps some of us don't know where our credit score is right now, and perhaps some of us do. So I have a couple of reasons. Let's see. Afraid. They don't want to know. Denial. Yes. If it's not there, I don't believe it. And that is true. And one of the things that I tell people, whether it's bad credit or good credit or no credit, it's all fixable. Obviously, good credit is the goal, but no credit or good credit, you can fix it. But the way we talked about goals is knowing your North Star, your end goal. So in order for you to know that, we have to know what the number is and just rip off the Band-Aid, right? I always talk about comparing financial fitness with being healthy. A lot of times we don't want to take the measurement, or worse, we don't want to get on that scale, but sometimes we need to know how to compare it, right? Or we just need to know where to start. And that's what I mean with credit scores. The point is for you guys just to know where it's at. So I encourage you guys, if you don't know the number, please look it up. You don't have to share it with anybody. Do not give yourself a hard time if you don't like where it's at. Do not let the credit score define you, but please just make yourself aware of it, because then you know whether you got to maintain it, get better, or just, work on it a little bit more. So it's just really important for us to know. And just so you guys know, the federal law, the Fair Credit Reporting Act, gives you the right to order your credit report once from each of the national credit bureaus every 12 months. So each of these national credit bureaus offer your reports free online. And I will caution you, because there's a lot of links that try to get your information and charge you. It's either called free credit report, but the actual website that's going to give it to you for free is annualcreditreport.com. So that's really, really big. And then also, somebody mentioned that they do it on their bank. Absolutely. If you are a Chase customer, you can go to chase.com and Credit Journey. If you're not a Chase customer, you can also do it there. But just like I said before, there's a lot of banks that do that as well. So, and I know there's more banks that are doing it. So I recommend that if you already have a bank, look it up already, Oh, Mint is a good one. Mint is actually, I actually met the creator of Mint, amazing man. So it's really important for us to just check it. And if you don't want to have to do the whole report, which we'll go into detail a little bit, it's really important for us to know that, what we're entitled to. So I think it's really neat, because now everything's free. And just so you guys know, I believe the one annual one does not hit your credit score, and we'll talk a little bit about hard hits as well as your bank. So I really invite you guys to go ahead and try it out, and to just really check out your credit score. So what happens at the credit bureau? It's a good question. So who gets to see your credit reports, right? Once we know that number, whether we're happy about the number or we're not, we just want to know who gets to see it. So it's really interesting, because with time, as credit scores becoming more important and more prominent, now there's certain employers that will pull up your credit to employ you. There's been, unfortunately, times where you don't get the job because of a credit score, and that's going to be really important. Good question. There is no difference. It's the same credit score that we use to buy as well as to get employed insurance. It's the same number. However, obviously, there's a difference of where you fall, but there's not a different report that you will look like. That same credit score goes for all this. So that's a really good question. Thank you for asking. I hope I answered that right. So employers, there's some employers that I know ask it. I don't mean that it's everybody. I can only speak for a few and a couple of feedback that I've gotten from clients. I know Chase personally checks their credit score, and I'm sure other banks do, which I would hope once you're teaching credit. Insurance companies do, including auto and home. Your landlords perhaps do. Lenders definitely do. For lenders, auto finance, credit cards, mortgage, and student loans, that is considered a hard hit. So a hard hit means it's counted as an inquiry. Too many inquiries could potentially hurt your credit score. Sometimes it's needed. So like I said, it's just a small percentage. But a lot of the time, and we talked a little bit about new credit, that's where all these fall under. So if you got a new job, then I got a new home, like you just want to make sure you're planning those things correctly, so all the hits don't come at once. But if it does, don't stress yourself out, because like I said, it's like a 5%. So you just want to know, you just want to be aware of that. And then I know that sometimes, depending, you always want to ask, right? So if your employee is going to check your credit, if it's going to be a hard hit, they have to let you know. It's not always asked, as well as your landlords, because sometimes it could be considered a soft hit. Soft hit means that you're able to kind of see an estimate of your credit score, but it won't affect it won't say like somebody winning your credit score, so it won't affect it. So it's really important for you to ask, is it a hard hit or a soft hit? So those are just some differences on there. And what's included in your credit report? So aside from, how you borrow and what type of lines you have, your identity is all on there as well. If anybody's ever pulled a full credit report, I actually have one from mine back in the day when I talk about my debt. It's actually a small reminder for me with all my debt. It actually has all my information, all the places I live, anywhere I recorded it. So it has all that information. It also, and we talked a little bit about the hard hit. So it'll say everybody who's ever checked their credit score is going to be on there, public records and as well as collections. So whether they're paid off or not, it'll show on there. So just think of it like a long financial history and information history. So it's really interesting. If you guys haven't taken a look, I invite you guys to do so. What's not included in your credit score, and this is really important for us to know, race, gender, age, income, marital status, your job, and where you live. So the reason is it doesn't show you a current address, but it does show you past addresses where you live, but it won't show the current one for safety reasons. And then the race, gender, and age and income, it really is because we're trying to make sure that there's no discrimination, right? So if you're ever applying somewhere and if your credit score is the only thing I'm looking at as a lender, it's going to be really important for them to base me off my habits and the way that I'm lending, not my race, gender, age, or income, or marital status. So it's really important. This is the reason why we don't add that on there. And build credit for the journey. So do you have thin credit or no credit at all, right? So does that mean it's not where we want to be, or is it just no credit? So these are some ways to establish, and I'll go a little bit into detail about them. So the one is paying student loans. I know that's not a fun one. I know sometimes it feels impossible at times to be paying off for student loans. But those are just some things that they recommend to do. Opening and regularly paying down credit cards. So what it means is just making sure you're paying your credit cards. We talked a little bit about that. How can you make sure that you don't have a high balance on it? And then opening just means that if you don't have a credit card, like I said, our goal, obviously, if you want to get on there to just for us to track, and by us, I mean the credit bureau to track credit score, you have to have some type of credit. So that's why we say opening one. And I don't mean opening regularly one, like once a month. So just make sure that I separate that. And it's having someone and trust add you as an authorized user on existing credit card. So what does that mean? And I'm going to explain it because you might be the one with the good credit trying to help somebody out. So I just want to get full disclosure to both parties. So what this means is that, let's say I have a credit card and, my sister perhaps doesn't have the best credit. What I can do is I can call my credit card company and ask her to be an authorized user. She cannot look into detail. She can't go into the bank. She can't close the card. But what she does get, she gets authority to use my credit card and the money in there. So what they'll do is they'll generate her a card with her name, and she'll be able to go use it at the stores. Obviously, the goal is for her, if she uses it, she pays it. So it's going to be really important if you do add somebody because you are so kind to share your good credit with somebody. Please be very mindful because a lot of the times that could ruin your credit if you perhaps were on the same page with somebody and perhaps maybe they weren't in the financial state to pay you back, then you end up being the one needing to owe that. So it's really important for you guys. That's what we say, somebody you trust. If you are the person that wants to be added, perhaps talk to a spouse, a family member, or even like a family friend. That perhaps can say, hey, I have the money for this friend. Like, I want to buy this TV. Can you make me an authorized user? I would buy the TV, pay you back. So like that, I can build credit as well. So those are just the ways that we do that. I know that now parents are really educating. They're starting to add their child to credit card. I will be honest. I was added when I was younger. I never knew the difference. It's important if you do add your child to explain to them the difference. Also, my recommendation is just so you know, as long as your child does not have bad credit, we have a lot of great, a lot of bank institutions have a lot of great tools for students. So a lot of times parents don't necessarily need to do that. So especially when it comes to kids, I always tell parents, as long as your kid doesn't have bad credit or didn't do anything before the age of 18, there's a lot of great programs for specifically to have credit cards for students. So just some of the things that I want to share that with you. And then asking your landlord or others, like your utilities, to report your payment activity to credit bureaus. So I personally haven't tried that. I have been told that sometimes that is possible. I will advise you that if your landlord, perhaps you're renting from a private party, maybe that's something that, you know, you have to look into to always ask your landlord, but that's another tip that the credit bureau has for us to improve our credit. And then managing your credit reports. So keep track and manage your credit activities, daily management, and review your credit reports annually to make sure your info is accurate. So check your reports for accuracy and dispute information that is incorrect or outdated. Have credit cards add any positive missing accounts to your credit file. So this is so important because a lot of times, I had my younger sister when she was starting to get credit, before she even got credit, she said that, you know, I don't have to check my credit score because I know I don't have credit. It's not under. And my recommendation was like, you just want to make sure that nobody else has used your credit, and you want to make sure that it says no credit. So that's why we say, look at it, right? Just you want to take a look at it. I'll also share, I had a good friend of mine who wanted me to help her with her credit. And when we actually took a look at her credit score, she saw that she had a collection bill from Cox for $50 that put her in collection, and she had forgotten about it. She didn't even know actually that there was $50 of Cox. So she immediately paid it off, and that helped her credit significantly. So it's really important for us just to be aware. And this is why I say, let's just take a look at it. The worst thing that can happen is just you see the information that you already knew. The best thing that can happen, you're like, hey, that's not right. Let me make sure I report that. Either that's fraud or identity theft, or perhaps, hey, I didn't know I had that $20 bill with Cox. Like, let me pay that off right now. And then that's going to help you. So those are just the really cool things, and I want to be able to share that. So it's not always a bad thing to take a look at the credit score. And so activity 2. So checking your credit score, right? So check all 3 credit reports. And then the other thing that, we're back to the homework. I guess for this one, really, I want to go into detail with what Chase credit journey is. I will say that the majority of banks, because I have multiple banks, they work the same. But I want to make sure that you guys invite yourself to go to your own bank and do this. If not, like I said, if you go to chase.com/credit journey, you don't have to be a client. You can get that yourself. But the really neat thing about this is that it tells you in categories where you're at. It even has a little pie chart. So you know if maybe you're past the 40%, the 5%, or the 3%. And it is also a really cool simulation, which basically is like, let's say you're thinking of buying a car. You can actually look at the credit score, and then you can add that you're going to buy a car for $30,000, and you'll see what it does to your credit score. So it's really cool. You can also look at let's say you owe a credit card for $500, and instead of buying brand new shoes, you're like, what is that going to do to my credit score? The simulation is really cool because you can pretend that you paid off the credit card, and it'll tell you an estimate of how much your credit is going to increase. So those are really cool things for you guys to check out. And like I said, you don't have to be a client. If you're a client, great. It's already available to you on your mobile app. So just some things that I want you guys to do. And as we're coming towards the end, my encouragement, because a lot of times these bank apps don't give you the full 3 credits. They'll pick 1 or 2, or they'll pick 1. Take advantage of the annual credit report and making sure that you guys know from all 3. You know, you just always want to make sure that your information, you know, is up to date. They'll also tell you if there was a breach in their system. So if your information is somewhere out there, they provide free protection for you, because that's one thing that they always do. So that's why I always tell people, check with those 3 credit bureaus, because you want to make sure you know where your information is going. And then the last thing is, what's one thing you will do to make progress towards your goal? So if you can put that in the chat box, I would love to hear some great things. I know that some people were like, I'm going to get a credit card. Like, I've had this credit, and, you know, I'm going to go do it. I didn't know that, you know, it wasn't going to affect me to have one. And then others were like, you know what, I'm going to make sure I do auto payment, because there's been 1 or 2 times that I missed that $15 payment, and I see now how that can affect my credit score. So it's going to be really important. And then pay down balances. Absolutely. That's a really good one. And then my other recommendation for you guys is checking the score, right? If perhaps you're not ready now, my goal is to eventually think about it and come across it. But that's really going to be important for us to really get to where we want to go. So do we have any questions or anything that you could perhaps put in the chat box or come off mute? And I didn't even realize how fast that was, because I love this topic about credit and everything. My recommendation really is questions about the spending quiz. That's a good one. I love that.
Jeanette, or maybe Betty, could you say a little bit more about the funding quiz, just for people who may not be aware of that resource from part 1?
Absolutely. So what the spending quiz is that you basically answer a scenario questions, right? It goes based on your behaviors. And at the end, it'll tell you what type of spender, whether you're a security spender, a social spender. So security means that you want to have that protection. You like to build the nest egg. So you're not really much of a spender. A social spender is you love to spend anytime you go out, anytime you're friends. That just kind of, it triggers your spending. So when you do put yourself in a budget, you have to give yourself those limits and, give yourself some free days. And I believe there was a couple other spenders, if anybody can remind me of them in the chat box. It's funny, I always remember the security spender because I know that's my opposite. And then I remember mine because it's the social spender. So that's the reason why I remember those. The martyr spender, yes. I believe it's for safety, right? Like we want to make sure we're safe or like we're in the emergency. So that one's a really neat one. The QR code, so I really wanted to talk about a little bit about this because I really love the feedback from last time. I had a lot of great feedback, and I also have some feedback that's going to help me with my presentations as I go virtual. I'll be honest with you guys. You guys were my first virtual crew, and I loved how, you guys were able to participate, and I love seeing all the participation. So just anything, my goal is always to be outstanding. Also, if you go through it, if you would like a financial review or like for me to reach out, please make sure that you just put your information. And I'd be more than happy to talk to you a little bit more about that. Oh, thank you, Jenna, you're awesome. Avoider, collector, spender, thinking, and Mario, you're awesome. So those are the ties, right? So if I invite you, I know Susan said that she put it on the website, or she can even send you those resources. Please take that quiz or make somebody else take that quiz, especially if they're telling you that they are a good spender and you want to really find out what kind of spender have them take that quiz and then let them know. And I love how you're a mix of all. That's awesome. So please, feel free to give me feedback. Other than that, I've had a great time with you guys. Thank you guys so much for having me. I really, really appreciate it. And with that, I'll just turn it over to you, Susan.
All right, thank you so much. So I want to say again, today, April 28th, we have had the pleasure of enjoying a presentation from Betty Santiago, Community Manager for Chase Bank, part 2 of the financial journey. And I do want to make sure everyone knows that resources and slides from part 1 are available, and as well as part 2. I'm grateful to each one of you who has participated in this webinar series. And I also, Betty, just want to thank you and Chase Bank so much for your amazing partnership on this project. I was delighted to learn that this is your first virtual, and you have really been amazing. Thank you so much.